Have you ever thought about investing in gold? Well, it's easier than you might think. Welcome to our beginner's guide to gold investing. Gold, the shiny precious metal that has been a symbol of wealth and prosperity since the dawn of civilization, can be a part of your financial portfolio too. But why should you consider investing in gold? Let's delve into the reasons. Firstly, gold has proven its value over time. It's not just a shiny piece of metal, it's a store of wealth. When economies tremble and currencies falter, gold has often been the go-to asset for investors, holding its value steadfastly. Secondly, gold is a fantastic hedge against inflation. In simple terms, a hedge is an investment that's made to reduce the risk of adverse price movements in an asset. So when the cost of living goes up, so does the value of gold. This makes gold a powerful tool to protect your wealth against the eroding effects of inflation. In addition, gold is a highly liquid asset, meaning it can be easily bought or sold. Whether you're in New York or New Delhi, you'll find a market for gold. This makes gold a globally recognized and readily tradable asset. Furthermore, gold offers a great way to diversify your investment portfolio. Diversification is a strategy that mixes a wide variety of investments within a portfolio. By adding gold to the mix, you can reduce risk and potentially increase returns. And lastly, investing in gold can be emotionally satisfying too. There's something special about owning a tangible asset that has been coveted by kings and emperors for centuries. So in a nutshell, gold is a valuable, versatile, and time-tested investment that can provide a safety net in uncertain times. Act as a hedge against inflation, help diversify your portfolio, and offer a sense of tangible ownership. So are you ready to dive into the world of gold investing? Let's get started. First things first, you need to understand the different ways to invest in gold. The world of gold investments is not a one-size-fits-all model. Instead, it offers a golden smorgasbord of opportunities. So, let's dive into the three main ways to invest in gold: physical gold, gold ETFs, and gold mining stocks. Physical gold is the most traditional form of gold investment. This is the gold you can touch, feel, and, if you're so inclined, bite into. It comes in various forms, such as gold bars, coins, and even jewelry. Investing in physical gold is like holding a piece of history in your hands, a shiny testament to human civilization's rich tapestry. When you buy physical gold, you're essentially banking on its intrinsic value, which has been recognized for thousands of years. But remember, physical gold requires safe storage, and that's an additional cost to consider. Next up, we have gold ETFs, or exchange-traded funds. Think of these as the virtual version of physical gold. Gold ETFs are securities that track the price of gold, allowing you to invest in gold without having to worry about storing it. The beauty of gold ETFs is their simplicity. You can buy and sell them just like stocks, right from your brokerage account. It's like having a golden goose without the hassle of cleaning up after it. Lastly, let's talk about gold mining stocks. These are shares in companies that mine for gold. It's a bit like betting on the gold diggers instead of the gold itself. When gold prices rise, these stocks often soar, sometimes even more than the gold price itself. But remember, investing in a company also means you're exposed to its operational risks. So tread carefully. Now that you know your options, it's time to learn how to make your first gold investment. Whichever path you choose, remember that all that glitters is not gold, but with the right knowledge and a bit of caution, your investment just might shine. Investing in physical gold can be quite exciting. Imagine holding a gold bar in your hand. But let's not get carried away and focus on the process of investing in this precious metal. Firstly, you need to decide what form of physical gold you'd like to invest in. Gold bars and coins are the most common choices. Gold bars, also known as bullion, are typically the preferred choice for large-scale investors due to their lower premiums. On the other hand, gold coins are more accessible for small-scale investors. They come in various sizes and designs, offering a sense of tangibility that bars might not provide. Once you've decided what to buy, the next step is to find a reputable dealer. Do your research, compare prices, and read customer reviews. Once you feel confident with a dealer, you can make your purchase. Remember, the price of gold fluctuates throughout the day, so the price you see at one moment might not be the same an hour later. After buying your gold, you need to think about storage. You could store it at home, but this comes with risks, such as theft or damage. Another option is to use a professional storage service, which often includes insurance. These services, also known as vaults, are usually provided by banks or specialized companies. Finally, there will come a time when you want to sell your gold. Just as when you bought it, you'll want to find a trustworthy dealer. The dealer will give you a price based on the current market value of gold. If you agree to the price, the dealer will buy your gold and the cycle is complete. And there you have it. You've just invested in physical gold, but what if you don't want to deal with the hassle of storage? Gold ETFs are a great way to invest in gold without dealing with physical gold. Let's see how it works. Gold ETFs, or exchange-traded funds, are a fantastic hassle-free way to get a piece of the shiny action. They're essentially funds traded on stock exchanges that aim to track the price of gold. This means when you buy shares in a gold ETF, you're buying a slice of an investment portfolio that's backed by physical gold. It's like buying gold but without the worry of storing it or the risk of it being stolen. So how do you get started? First, you'll need to choose a gold ETF. There are many out there, each with their own pros and cons. Some track the price of gold more closely, while others may offer potential for higher returns but with greater risk. You'll want to do your homework here. Look at factors like the ETF's performance history, its expense ratio, and how closely it tracks the price of gold. Next, you're ready to buy shares. For this, you'll need a brokerage account. If you don't have one, there are many online platforms that are easy to use and offer a wide range of investment options. Once you've set up and funded your account, you can buy shares just like you would any other stock. Simply find the ticker symbol for the ETF you chose, enter the number of shares you want to buy, and hit buy. Selling your shares is just as straightforward. When you're ready to cash in on your golden investment, simply find the ETF in your brokerage account, enter the number of shares you want to sell, and hit sell. The proceeds will be deposited into your account, ready for you to use or reinvest as you see fit. And just like that, you've invested in gold without ever touching a gold bar. But what if you want to take a more direct approach? If you're feeling a bit adventurous, investing in gold mining stocks might be for you. Let's dig into it. Investing in gold mining stocks is like taking a journey into the heart of the gold production process. It's a little more complex than investing in physical gold or gold ETFs, but it can be extremely rewarding. First, let's talk about how to choose a mining company. This isn't as simple as picking the one with the shiniest logo. You'll need to conduct some research. Look at the company's financial health, their production costs, and their reserves. You want a company that's financially stable, can produce gold at a low cost, and has a large amount of untapped reserves. Think of it this way, you're looking for the Goldilocks of gold mining companies. Not too big, not too small, but just right. Now let's move on to buying stocks. You can do this through a brokerage account. If you don't have one, don't worry. Opening a brokerage account is a straightforward process. You'll need to provide some personal information, choose the type of account you want, and fund it. Once you have your account set up, you can use it to buy shares in the mining company you've chosen. Remember, investing in stocks always carries a level of risk, so don't invest more than you can afford to lose. Finally, selling your stocks. This is where you hope to make a profit. You can choose to sell your stocks when their price increases to a point where you're happy with the profit you'll make. Alternatively, you might decide to hold on to them if you believe their value will continue to rise. The decision of when to sell is ultimately up to you and should be based on your investment goals and risk tolerance. There you have it, the ABCs of investing in gold mining stocks. It might seem like a lot to take in, but with a bit of research and patience, you could strike gold. Congratulations, you've just invested in a gold mine, but how do you know which type of gold investment is right for you? With so many options, choosing the right gold investment can be a bit overwhelming, but don't worry, we've got you covered. Making the right choice of gold investment involves a little bit of self-reflection. First, you need to understand your risk tolerance. Are you a daredevil, ready to ride the wild roller coaster of gold mining stocks, or do you prefer the slow and steady climb of physical gold? Remember, greater risk can lead to greater rewards, but also greater losses. Think about how much fluctuation you can comfortably handle. Next, consider your investment goals. Are you investing for the long haul or looking for a quick profit? If you're saving for retirement, physical gold or gold ETFs might be your best bet, as they tend to be less volatile and offer a long-term store of value. On the other hand, if you're willing to take on more risk for the potential of higher returns, gold mining stocks might be the way to go. Then, you need to assess your financial situation. How much money do you have to invest, and can you afford to lose some if the market takes a downturn? Physical gold requires a larger initial investment, as you'll need to buy the gold and possibly pay for storage. Gold ETFs and gold mining stocks, however, can be purchased in smaller amounts, offering a more accessible entry point. Also, consider the liquidity of your investment. Physical gold can be harder to sell quickly, while gold ETFs and mining stocks can usually be sold at a moment's notice. Finally, don't forget to consider the tax implications of your investment. Physical gold, gold ETFs, and gold mining stocks are all taxed differently, so you'll want to consult with a tax professional to understand the implications. As you mull over these factors, remember that diversity is key. You might find that a mix of physical gold, gold ETFs, and gold mining stocks works best for your situation. Remember, the best gold investment is the one that aligns with your personal and financial goals. Well, we've covered a lot today, so let's recap the key points about investing in gold. First and foremost, we unearthed the basics of gold investing. We learned that gold has been a valuable commodity for centuries, appreciated for its rarity, beauty, and resistance to corrosion. Investing in gold can provide a hedge against inflation, act as a safe haven in times of economic instability, and add diversification to your investment portfolio. Next, we delved into the different types of gold investments. Remember, there's more than one way to strike gold in the investment world. You can invest in physical gold, which includes gold bars, coins, and jewelry. Physical gold gives you a tangible asset that you can hold in your hand, but it comes with storage and insurance costs. Alternatively, you can opt for gold exchange-traded funds or gold ETFs. Gold ETFs are a type of investment fund and exchange-traded product traded on a stock exchange. They offer a practical way to gain exposure to gold without the need to store or insure physical gold. However, it's important to remember that when you invest in a gold ETF, you don't actually own the physical gold. We also explored the world of gold mining stocks. These are shares in companies that mine gold. This type of gold investment offers the potential for high returns, but it also comes with a higher risk level compared to physical gold or gold ETFs. When you invest in gold mining stocks, you're not just investing in gold, you're also investing in the performance of the mining company. Then, we embarked on the journey of choosing the right gold investment. We emphasized the importance of understanding your investment goals, risk tolerance, and time horizon before making a decision. It's also crucial to do your own research or seek advice from a financial advisor to ensure you're making an informed decision. Finally, we discussed the process of making your first gold investment, whether it's buying a gold coin from a reputable dealer, purchasing shares of a gold ETF through your brokerage account, or investing in a gold mining company. The process is straightforward once you've done your homework. Remember, like any investment, gold investing comes with its own set of risks. The price of gold can fluctuate and there's no guarantee of return. However, with careful consideration and due diligence, investing in gold can be a golden opportunity to grow your wealth. And with that, you're ready to start your journey in the golden world of investing. So go on, make your first gold investment and let your wealth shine.